after undershooting their budget estimates, it's gone 3x, it's grown at 16% CAGR. The private sector, government was hoping that the private sector will take over the baton. They have not. The environment or the mood when I talk to corporate CEOs still is of measured or cautious optimism. They're optimists, but they're very measured in their approach, and they don't want to put their... The good thing is, but private sector balance sheet and the financial sector, banks balance sheet are in a very healthy state. The question is what is holding back the animal spirit. In segments of economy where the government have stepped in, investments have actually picked up. So you look at defense. Defense has done phenomenally well over the last 4 years because the government has stepped in. Railway Capex has done well because the government has stepped in. You look at PLI. So all the manufacturing driven Capex has really picked up, driven by incentives from PLI. I think what I would expect, my expectation going into the budget, given the fact, while this is the first budget of the new government, but we also need to acknowledge that it is the 12th budget. It's a government in continuity. It's a government in succession. You can't call it a first budget. To me, it's the 12th budget. I would like them to play, I would expect, given the fact that the mood of corporate India is slightly more cautious or cautiously optimistic, government needs to take the lead. I would be very disappointed if it's not a very bold budget, because you would not get this opportunity again. The government needs to take the lead.
By bold, okay, 2-3 things which are bold. Let's raise a sharp
focus. Aggressively double down on reviving investment in the economy. Whatever they did has helped, but probably we need on a much bigger scale. So if government bought PLI linked incentive in 2020 and 21, and over the last 3 or 4 years they've expanded that has really helped, that has picked up. But we need much more bolder. I think double down on investment related incentives in the economy.
But do we have that bandwidth? Sorry.
Resources are there.
Fair.
While we still have to manage our fiscal deficit, resources are there. And government can find resources. So aggressively, you just have to double down on that. And we are at a stage where some of the major economies, let's say the biggest manufacturing capital of the world, China is facing trade headwinds. India is unlikely to face those kind of trade headwinds from US. So we have an advantage from a global perspective where global companies are wanting to shift their supply chain to India. We cannot let go of this opportunity. I must acknowledge we have missed the bus, or we have let go of this opportunity multiple times in the last 20 years. We should not let go, drop the ball this time. We need to go out and seize that.
What a strong statement there.
If we don't do that, I'm sorry, we are missing the bus again. So we need to do that. At the same time, we need to acknowledge that we are coming out of an environment where real incomes have declined. Household needs help. So you need to do something for the middle class. Some tax reduction for the middle class is important because you need to help, because on real income of household have declined in the last 3 or 4 years. Inflation has been pretty high or pretty steep. So you have to play, just to summarize, you have to play on all fronts. I would want a finance minister who's playing more like a Sehwag than a Rahul Dravid today. And you just can't let go of this opportunity.
So just to what Pankaj said and what Radhika also mentioned, just connecting the dots between the two, and of course I completely agree with middle class getting squeezed out due to inflation, and so the demand has taken a hit, and so private sector capex is not coming in. So for example, just to take from Pankaj's example, electronics we have done really well, right? Mobiles, because we are already consuming mobiles, we are importing it. Now we are manufacturing it. So for mobile, the demand was already there in the system, and we have created a incentivized structure in terms of PLI to manufacture it. So now we have to create demand. Actually, we need a demand booster in many sectors, I would say.
I would go to the extent that while as per the FRBM, we are supposed to get to a fiscal deficit of 4.5% next year in terms of this as B estimate. Even if she pushes the target out by 1 year, but if she doubles down on investments and reviving economy, the market and the economy will be extremely
unlikely.
Very strict on the fiscal deficit target.
Which is why I'm saying we need out-of-the-box solutions. The economy is in the middle of a slowdown. You have to do unlikely things.
Okay, let's ask another guest about whether this has happened, and Radhika would have strong views here, but I need to get in Vikas Khemani in the conversation. By the way, I also need to thank Rahul Arora. Rahul, please enjoy your birthday. We've kept you waiting, but thank you and enjoy your birthday. But Vikas Khemani, founder of Carnelian Asset Management and Advisors with us. Vikas, the mood on the table out here in the studio is that there needs to be maybe some unlikely things done in order to revive animal spirits, because like it or not, private capex has not turned out, right? What is it that can be done within the limited fiscal space that the finance minister has?
Hi, Neeraj. I think, first of all, I'm sure there are lots of initiatives government will take or is taking will take to kind of push the economy forward. Of course, government front-ended lots of public sector investments has been doing. I think first half of the economy, maybe due to elections, infrastructure investments slowed down or government spending slowed down, and I think that got compounded actually by squeezing the liquidity, and that is where I think the recent measures of RBI is quite helpful. I think, in my opinion, I am not as negative as some of the other co-panelists on the private capex. I do believe that it's going in right direction. Of course, there can always be more. There's no doubt on that. The key reflection of that is in the order books of all the companies. I think most companies are expanding, but obviously you do not want to see the capex cycle of the previous time where reckless lending happened and that eventually created a problem in the banking system. So I think very often we compare with the China model and push that kind of investment cycle here. We must not forget that India is also a very ROE conscious market. If tomorrow promoters or companies do investments, keeping the target of the China's ROE or other countries' ROE, I think the markets won't like it, right? So I think that clearly the orderly capex should happen and is happening. The only thing probably one is not feeling as much is because it is not reflecting the credit cycle, but at the same time that is getting funded through internal accruals and the equity. So I do believe that. I think, of course, a lot can happen to accelerate investment cycle, and I'm sure government is conscious, and there would be some measures on the in the budget to push that forward. And other thing I would make is that actually what numbers they put in the budget really doesn't make as much difference as much as the execution, because we have seen that execution is what is going to drive the real thing, and I think that matters the most. And at least I was reading some article somewhere yesterday that government plans to spend a lot of money in this current quarter to kind of where they lost out in the first half of the year. So I guess some of those things are being done. So I would say that we are on right track.
Also joining in, I want a quick take. So from a global standpoint, demand seems to be difficult in terms of recovery. So we are relying on domestic. Now we've spoken for too long about how GDP per capita has to go up. It's not really moving in a significant fashion when you're looking at it over the last 5 years as well. What is it going to take in this budget to get there?
I think clearly, in my opinion, the income tax rates in India, especially the personal income tax rate in India, is very high, and I think middle class takes very, very big knock of it. In my opinion, even the maximum marginal rate is very, very high. So we definitely need to bring down the income tax rate. Government did bring down the corporate income tax to a reasonable level. I think that needs to happen, and if that happens, I'm sure it will be very, very positive sentiment, which will boost consumption, which will boost also ease the bit of pressure on the middle class. So I think that is one thing in my opinion, and I guess that's the most likely outcome of this budget. Rest, I would say that government has been doing a lot more great things in terms of pushing forward the same agenda, execute more faster, more sharper. That is, in my opinion, far more important. And identification of the problem is there, but execution, I think, should be, in my opinion, a lot more accelerated.
Okay, let's do a quick round the table. And of course with Vikas on what is the top expectation on this budget, and no prizes for getting it right, but bragging rights. So, so let me start with you, Pankaj. You talked about a lot of things that you think should happen or hope will happen. What do you think will actually happen? One thing.
I think there'll be some relief for middle class households. So essentially, I'm expecting for some relief on personal taxes, expanding of the exemption limits or lower tax rates on the middle income household. I think there's a real acknowledgement. It's been about 3 or 4 years where real incomes for middle income households have declined. So we really need to solve that to help our consumption, because
and a big hint from Prime Minister.
Yeah, exactly.
Mahalakshmi.
I think, yeah.
Mahalakshmi ki
I hope
kripa.
so, yeah. So I hope so. Mahalakshmi, Goddess Lakshmi really,
Gives them. Okay, so tax cut for middle class. Radhika, what about you?
I'll expand it and say, he mentioned bold thinking on Capex. I think you should do really bold thinking on this tax cut and middle class. So it's not incremental 20,000 rupee, 30,000 rupee. I don't think that's the need of the hour. I think severe reduction in tax slabs, really rethinking some of these old limits, like the investment limit is I think 1.5 lakh. The interest on housing, I mean, it hasn't been revised for years and years.
Yeah,
and
it's been over a decade.
I mean, 1-2 lakhs of interest income in a city like Mumbai, Delhi, Pune, where real estate prices and rental incomes have gone. I think those need overhaul, actually, and absolute rethinking for the current realities. So part of it is expectation, part of it is a lot of hope, but I think you really need big, bold thinking on
Sorry, but where does the
consumption.
money come from for doing all of this?
So look,
GST,
that's what I was going to say.
You're not getting that much.
Tax collections are up. They're not bad.
Okay.
And plus,
And by the way, I agree with him. I know Neeraj made a face when he talked about pushing out fiscal deficit targets.
I
But,
don't
you
think
know,
it will happen.
I talk to my bond CIO, and usually bond market guys are fiscal deficit, fiscal deficit. He's like, this time if they let it slip a little bit in favor of growth, it's not such a bad thing. I would go that far.
उनको चलेगा.
उनको चलेगा.
नहीं वो हो जाएगा but my making a face is not about whether it should be done or no. My making a face is that I don't think it will happen. So that's
But we
my
have a
point.
right
It
to
won't
be
happen.
wishful now.
The point is, when you're giving your 12th budget, if you can't be bold and you still have 4 years to go,
See, that's an incentive.
then whom do we expect
What
to give
else
up
do you need?
out
What
of the
else
box
do you need?
reforms?
In fact,
Who else will do it?
In these
Who else?
in
Who
these
else?
circumstances, it should happen.
You still have 4 years to go
Correct.
to do your course correction.
Parag bhai.
so for once this middle class, 100% I agree. Some relief has to be given through some way. I think tax, reducing the tax bucket and all, which Pankaj mentioned. I completely agree with Radhika on housing part, which I also mentioned earlier.
Yeah.
That housing tax, that reduction limit has to increase. Because if you want to, as she said, right, that even if you want to buy a house in Bombay, what does that 2 lakh rupee deduction mean to you? So that has to, and remember, my center stage of my thinking is that right now we need demand acceleration in the country. See, you can not just say that PLI, I'll give PLI, so plants are put. As I told you, electronics, demand was already there. And so you just balance it, that now you are not importing it, you are not increasing your current account deficit, and you are manufacturing it, which is a very good thing to do. But in some sectors, you need to create demand, right? If there is no demand for tractors, how Mahindra is going to put the plant? So to revive the Capex cycle, private sector Capex, I think you need to revive demand.
Maybe just one more point on this whole thing when we are discussing this. I think the highlight or the headline of the economic survey really acknowledges this. Deregulation, deregulation, deregulation. On one hand, we want to revive animal spirits in private sector. On one hand, we want to regulate. Central governments, state governments just need to get out of the way. Just unleash the private sector.
This is what Chief Economic Advisor said yesterday.
Exactly.
Government,
So
please get
just
out of
get
the
out
way.
of the way.
Wow.
Let the private sector. These are corporates who can decide for themselves what is good and what is not good. Let the government not sit on judgment in terms of what you can do and how much you can do. Let people fail. Let companies fail. That's very much a part of the ecosystem.
I don't know if I'm a minority, but I'm not somehow so hopeful. I'm hoping I'm wrong here, and I'm hoping I'm here something like this. But
Vikas is not so rapid fire round, but okay.
No, I am with you on fiscal thing. Fiscal, I don't think so they will
Stick to it.
compromise.
Okay, Vikas, what is the one thing that you think will happen this budget?
Common expectation is about the sort of personal income tax. But my important, point is that I think the firms should also do something to get money towards the fixed deposits or to the banking system. I think because the tax rates and the previous incentives being removed, there's no more incentive to invest into fixed income, and that as a result of that, you have a very small amount of money going towards the banking system and credit side. And that, I think, if you ask me, is a very big risk today. And eventually, banks will give it to for the corporates, but most banks are struggling in the growth in the deposit, and that's where I think, in my opinion, some tax incentives should be brought back so that the middle class is incentivized to invest into credit products.
Yeah, I think, Vikas, it's an interesting point, right? We're just making this point that it's very rare to see a stock market enthusiastic investor talking about encouraging money or capital flow towards fixed deposits, but maybe because banking needs
That's
it
the
as
right
well.
thing to do for economy.
Yeah. No, I get your point
I
completely.
mean, because Radhika is over here and she's like, if the money is going to go to FDs.
No, I'm actually
in the
not saying
reverse
that.
flow.
By the way, I have told, whenever I've had the opportunity, I've spoken to many people in government and said it's actually not about FD, but right now, today, what you've created, and look, I'm a mutual fund person, but you've created a situation where equities are at 12% long-term tax and fixed income is fully taxable, whether it's in the form of debt mutual fund or FD. It's a little bit of a wide gap from an asset allocation point of view. So you can rethink FD, but you can rethink debt mutual funds also.
Radhika,
Neeraj isn't liking
you just
that.
set the cat amongst the pigeons. I should have. Am I wearing green? Yes. I think me and Radhika are opposites today.
But she is not suggesting increase in the equity. She is
I'm not
suggesting reduction in the
I'm not
tax
saying that at all.
on
Never would I say
fixed
that.
income side.
Now does that change?
No, I know she was not saying that.
I would
was just
never say
hoping-
that.
Exactly.
Just one more point on the fiscal deficit. Since we're discussing, or I made that point of letting go of fiscal deficit targets. Probably the FM can borrow courage from US. Look at US. They're in 5th year of this economic cycle. Yeah? They are running 6% fiscal deficit.
Correct.
I understand that we don't have the privileges that US has of having a sovereign currency.
Yeah.
But if an economy like US is running 6% fiscal deficit in the 5th year economic cycle, I certainly think we can let go of 30-40 basis points to accelerate our growth.
Okay,
And
little
just
poor
one
joke.
more thing.
Courage of the US is President Trump back again after promising to put tariffs everywhere.
Just one thing I wanted to say on this. See, disinvestment, we are not doing anything. We actually missed a bus of a huge PSU rally. Right? Huge PSU rally. IRCTC and Hindustan Zinc, if I add the government stake value at today's price is
But
80,000
that's off
crore.
the table now because
Yeah.
that's unpopular. So don't expect anything
what
which
I'm
is
saying
not.
is-
No, that
No, but
intent is
that's
clear.
been the grouse always, right?
No, but that intent is also clear. They do not want to let go of the family silver. The idea is
No,
let's
I'm
fix
saying-
it and
I
run
think
it.
even
No,
state
but-
PSUs need to be looked at, by
Yeah,
the way.
but just the point that,
It's
sorry,
not-
we need to wrap, we need to slip into a break, but this has always been the grouse, and the government is not able to disinvest at the right valuation, which has
That's
always
what-
been the pain
yeah.
point. Don't think it's changing, unfortunately. But all of you, thank you so much for
Thanks.
being with us today. It's great, this conversation that's happened today. Vikas, thank you so much for being with us on the show today as well. Really appreciate your time. We do slip into a very quick break, but more budget coverage on the other side. Stay tuned.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
As we decipher the impact
of this budget on you.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard
just about an hour to go for the big day. Live pictures coming in outside Parliament. Finance Minister Nirmala Sitharaman walking in with the budget document. This is the heightened expectations is very interesting this time round. We keep saying that budget is actually just a statement of accounts of the country. No, this time it's a statement that India is making to her people and to the world as well. Meanwhile, markets are up in anticipation. 23,557 on the Nifty. Not half bad for budget morning at all. The setup has been going on for the last couple of days as well. But look at some of the big movers this morning that we are seeing. Definitely the budget play in action can be seen very clearly. If you look at some of the fertilizer stocks that have been moving and IRB Infra that has been moving, KPI Green. So I would say more action in the broader markets than on the main line as well. Ashish Gupta joining us this morning, Chief Investment Officer, Axis AMC. Ashish, very good morning to you and thank you so much for your time on Budget Day. I know it's a Saturday. We're all up, awake in anticipation and excitement, waiting to see what happens. What is on top of your list of expectations?
Look, good morning, Tamanna. No, I think, as you said, this is an important budget. It's really the first full budget of the new term. And I think, to my mind, the fiscal deficit is really what we need to see the paths of consolidation continue. Of course, there are growth imperatives as well, but I think in the volatile global macro environment that we have, it is important that India continues to demonstrate its strong macro fundamentals. And it will be important that the government continues on the path that it had indicated last time, that in FY26, the fiscal deficit will drop below 4.5%. So I think that is the first part. And I think it is important also because this is needed to ensure that the cost of capital for the private sector continues to come down. So to my mind, that is the most important indicator. I know there are a lot of expectations around potential tax incentives to boost consumption. But to my mind, more than taxation changes, the focus has to be on improving non-tax revenues. And I think even your previous panel spoke about it, that how do we get the non-tax revenues up? Over the past few years, we have seen tax to GDP improve significantly. But non-tax revenues have not gone up. So I think if we can get some impetus on that, that will actually enable the government really to up spending and support growth.
Ashish, what's the best way to do that? Good morning, Neeraj here. What's the best way to do that, non-tax receipts? Because, I mean, the needs for funds are enormous. The ways to get them, very limited, right?
Sure. So I think divestments are really the only way, and it also need not be strategic divestment. It not just be letting go of control. Over the past few years, we have seen, given the improved profitability of many public sector enterprises, improved governance in many enterprises, there have been significant re-rating of these companies. Their valuations are in many sectors comparable to their private sector peers. So the government diluting their shareholding in these companies is something that is certainly possible. In fact, the government can actually also potentially look to go below 51% in many of the companies. But even if they continue to hold majority, there is still a significant room to raise resources, at least this year. But if that path has to be continued, I think then the government also has to think about in which corporations can they operate with below 51% shareholding.
Ashish, in your view, what would be the couple of big disappointments if they were to come, both from a markets perspective and even from an economy perspective?
Oh, I think, to my mind, first of all, I think the biggest thing I'm watching out is fiscal deficit. So, if there is any kind of dilution in the paths of fiscal consolidation, that will be a disappointment. I know there are growth imperatives, but as I said, given how the global macro is set up, we don't want to give that signal. Uh, the second to my mind will be if uh, there is any further changes in the tax structures, particularly direct tax structures, that because already in the last couple of years there have been significant changes. So I think too much tinkering around doesn't really help. You need the new tax regime to stabilize rather than make very frequent changes.
Okay. Ashish, just a word on what has been the big talking point, right? That fisc deficit number, which at 4.9 is a given. Now, assuming that the receipt picture is yes, not looking all that great, but the capex done or the expenditures done have also kind of lagged this time.
Yeah.
If the fisc deficit number for the current year is at 4.8 and she sticks to the glide path or improves upon it, normally it would be a positive. But in this case, would the markets be disappointed with it? Because that would mean that the government is steadfastly on the fiscal consolidation path at the expense of spending on economy, because currently the economy needs some bit of boost to revive demand. So would a aggressive fisc consolidation be looked upon as a negative as opposed to a positive, or not so?
Sure. So I think if the fisc consolidation is much more aggressive than the 4.4, 4.5% that has been indicated, yes, I think that will also be seen as potentially a negative signal from a growth perspective, because we know actually it is government spend that has been a key driver for growth for the last 4-5 years, including on the investment side. And given the fact that you have, so actually, as you rightly said, FY25, 4.8, 4.9% is very easily achievable, right? So I don't think there are going to be too many surprises there. And whether FY25 ends at 4.8 or 4.9, it does not really matter from a growth perspective, because that is already in the past. So it is really what is the FY26 government expenditure that is going to come through? Is it going to grow in double digits or not? That is the key that we have to watch out for.
Okay. Ashish, in terms of what budget can do from a capital markets perspective, we've been speaking about economy, we've been speaking about consumption, but purely from a capital markets perspective today, what would you say is the top factor that will give some relief?
So, frankly, some of the challenges that the government has this time around. So, in the past couple of years, the government has had very good tax buoyancy. So, if you see every year, tax revenues have grown faster than the GDP growth, and that has enabled the government to really up the Capex spend and overall expenditure. I don't think the market is expecting that flexibility to be available this year. So in that sense, the expectations from the budgets are not very high. Capex growth, we still expect to be in double digit, but as Neeraj highlighted earlier, it is coming on back of the fact that FY25 Capex spend probably will be lower than what was budgeted. Right? So from revised estimates, you will have a double-digit growth, but if you potentially look budget estimate to budget estimate, you might not have a double-digit growth. While there has been asked for some boost to consumption, some measures to boost consumption coming from the budget. But I don't think markets have really kind of priced in that, or so if you see the market behavior, price actions over the past few weeks, it is not as if market is going into the budget with some very high expectation. So I think as long as there's no big disappointment in the budget, we don't think there should be too much negativity, even if there's no fresh big bang measure to boost consumption.
Thank you so much, Ashish. Ashish Gupta there from Axis AMC on what is expected from the budget, and hope you have a great rest of the day. We're waiting and watching. Just about 45 minutes ought to go for the budget speech to start. But meanwhile, quick look at the markets and what's buzzing at this point. Mahima is joining us with a list of top buzzers in trade right now. Mahima.
Right, so it's a mix of stocks which are buzzing on the back of earnings, as well as, pre-budget. There are some trades being taken in certain sectors. To start with, ID Forge is the top gainer today, buzzing ahead of budget, and the stock did see a significant tanking post its earning. So there is some, buying there seen. Now the second one is Prestige Estates. This is on the back of a Jefferies note, which has upgraded Prestige Estates to buy from underperform and has raised the target price to 1600 versus 1420 earlier. What they're saying is that the large Capex program is on track for the company and providing headroom for scale up going ahead. The next one on the list is MedPlus Health Services. This is buzzing on the back of its earnings again. Margin expansion was on account of increased contribution from private labels, is because of which the stock is buzzing in trade today. The next one is Inox Wind, again on the back of earnings, where revenue was up 81%, EBITDA up 123%. Margins have improved from 18.4 to 22.7. Net profit up 116 from a 1 crore amount. In terms of why the EBITDA has seen such a uptick, 82% YOY jump in execution of a 189 megawatt. There was an inventory reversal of around 364 crore and 28% annual drop in EPC, O&M and common infra expenses has taken place. Another set of stocks that is buzzing in trade today is the railway stocks. This is ahead of budget, of course. SJVN, Jupiter Wagons, Titagarh are all buzzing. One separate set of stocks that are buzzing are on the back of potential support for battery energy could have some space in the budget today, which is why we are seeing an uptick in JSW Energy, Tata Power, NHPC, Vari Energies, Adani Green, Amara Raja and Exide Industries. Now, these are the top gainers, of course, but we also have some top losers. The first one being Aster DM on the back of numbers. Their profit was around down due to one-off merger expense, which is why it's seeing hit. Otherwise, the numbers were in line. The revenue was up 10%, EBITDA up 25%, and margins have improved from 15.9 to 18%. The second one is 5-star business, which is taking a hit in trade today, where net profit was up around 26% and total income was up around 28%. And lastly, Karnataka Bank is also seeing some profit booking in trade today after its earnings, where net profit was around 284 crore versus 331 crore. Gross NPA at 3.11%, net NPA at 1.4%, and the net interest income was down by 4%, which is why we are seeing a downtick in that particular stock. So all of these counters, either in green or red, but are buzzing today.
Okay, so a lot of buzzers. One of them is actually Wockhardt as well. Let's pull up the Wockhardt stock because it's their new super hit Zenic, which has got a nod and will go into second phase of clinical trials. In fact, we spoke exclusively with Wockhardt chairman Habil Khorakiwala on this wonder drug Zenic. Listen in.
We have just completed phase 3 clinical trial, and this clinical trial establishes Zenic is a superior treatment, which is very rare happening in antibiotic or any drugs. Second is that we should be expecting this drug to launch in India by early next year, and in US maybe middle of next year, because we will be filing in US sometime in middle of this year, and then we expect sometime in the middle of next year to receive approval.
All right, now to our budget masters who are with us in the studio and will be with us through the budget speech and will tell us, based on their expectations that they'll lay out right now, how did the budget fare, if you will? Pranav Sehta, National Leader, International Tax and Transaction Services, EY. Mihir Vora, CIO of Trust Mutual Fund. Both of them with us in the studios. Gentlemen, both of you, thank you so much for joining in. Really appreciate your time. There was a hot debate around what is it that the budget can do within the limited space does it have. Can it overshoot the fiscal deficit target a little bit in order to spur Capex demand, etc.? Mihir, initial thoughts.
See, I think there is limited, space for the government to maneuver, especially given the fact that we need to balance investments and infrastructure, etc., versus, boosting consumption. So there is a fine balance to be maintained. The good thing is that, at least from the stock market point of view, till say the middle of yesterday, there wasn't much of expectations. Markets have been kind of discounting a lot of slowdown, etc. And just because the Prime Minister made some good comments on the middle class, there was a bit of expectation. But apart from that, I don't think we are going in with too many expectations in the budget. So no bad news will be good news, I would say.
Okay.
In the budget, and anything else will be a bonus.
I find this interesting. So you're linking that comment. And if you have that soundbite, we should quickly play it as well, where Prime Minister talked about how Goddess Lakshmi will shower her blessings on the middle class as a kind of trigger for the market, that there is going to be a big boost for consumption. Is that the biggest ask right now, Mihir?
I think that's not the biggest task, because as far as consumption is concerned, for the rural masses, states are already doing a lot. All the 12 states which have introduced different schemes for women, etc., all put together is already 2 lakh crores of stimulus. They are almost 0.6% of the GDP, which is already being given to women as stimulus. So I think rural-wise, the centre doesn't need to do much in any case.
There are enough of those Ladli, Behna and
so
all
that's
those schemes.
Almost 2 lakh crores on annualized basis. So that's a decent stimulus in any case. For the urban middle class, what can be beneficial is you do see some tax breaks, etc. Because we are seeing some signs of stress in the urban consumption thing. So anything which boosts sentiment for the urban middle class will be good. But I think more important to see is whether the thrust on central government Capex continues, because that's been one of the big drivers of the economy for the last 5 years. We've almost seen 25 to 30% compounded growth in Capex spending since 2020, and that's been one of the pillars why we could come over the corona slowdown. I think that still needs to continue because the private sector still hasn't kicked in to the extent required. So a continuation of schemes of government schemes on railways, roads, defense, etc., plus more sectors and larger outlays for the PLI schemes is something that would be more important in my view.
I'm just going to play out that sound clip from Prime Minister, and then we'll ask Pranav Sehta whether there is enough space and what is the possibility of those tax cuts we're all anticipating.
मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है।
Okay, so a couple of things that we need to talk about. I think on the personal tax front, as well as I would say on indirect taxes, the tariff response as well. So Pranav Sehta, let me start by asking you about the personal tax front and this idea that the boost to consumption can come with some tax tinkering. We've seen, and tinkering is the word, very, very little here and there, which doesn't actually do much for consumption.
Yeah, I think it's more about the sentiment and the expectation than much ahead of that. But I do feel that something will be done in terms of helping the middle class get a little more boost to consumption. May not be very significant in the ultimate analysis on the pocket of the middle class, but still that helps in terms of the sentiment, as well as the fact that the government is thinking about them. And that's, I think, one thing that will happen. I also do feel that to some extent there will be an impetus given to Make in India maybe through PLI, indirect taxes schemes and so on, or maybe through some amount of restoration of a concessional tax regime on manufacturing. I do hope that comes. Since we are talking of expectations, I do hope that's something that comes, because across the world we are seeing an impetus being given to domestic manufacturing and so on. So I do feel that will help to a large extent.
Which sectors do you think there's a possibility of seeing this in?
I would feel that this might be across the board, but at least in sectors which can promote a lot of employment generation or job creation. I think that's one thing that the government will want to focus on, to somehow bring about that animal spirits back again. And unless manufacturing is given that fillip, job creation is not going to be easy given our demographics. So I do hope and feel that that's something that they will also focus on.
Mr. Sethia, good morning, of course, and it's always great having you. All right.
Sure.
Just wondering, one of the problems for the capital markets has been the incessant outflows. Now, taxation changes can't change that. It needs to be economic conditions. Right. But taxation changes at the margin influence whether or not there are enough incentives out there or disincentives to come in or go out, right? Is there anything that you hope, or is there anything that you fear in the budget, fine print or otherwise, that could have a bearing on this?
I hope not. In fact, I do feel that if they maintain the stability, consistency, clarity, and providing certainty, investments will come in. The chief thing here is to ensure that there is ease of doing business. That's, I think, where the second generation of reforms is really required. Because unless, and the economic survey speaks so much about it, deregulation. I think if that's what happens and the government Capex on infrastructure keeps up, which over the last 8-10 months has been a little muted, I think those two things, deregulation and providing the right kind of infrastructure, will be the best fillip that one can give to investments, both foreign as well as domestic investors. Otherwise, even Indian businessmen probably will invest more abroad than in India, is what we are seeing these days. So I do feel that that's something that will be very important. One, keeping the regime stable and predictable, which I think the government has done a good job so far and will continue to do that. Second, Capex, which has been great over the last few years, but the last 8-10 months have been really very tepid, and that I think needs to pick up, government Capex infrastructure building. And third is, as I said, to some extent ensuring that deregulation and the next generation of reforms, for which also I think that taking states along will also be very important and critical. So somehow building that consensus which they built, I think when they brought in GST to a large extent, that consensus building and taking states along, because that's where a lot of the next generation of reforms will have to come as well from, whether it is land, labor, some of the infrastructure and so on and so on.
That's an important point because in some sense, what states do or don't do has a large bearing right now on how the economy does, because there is a red alert out there on the fiscal health of a lot of states who are doling out freebies currently in order for political compulsions, if you will. So what to your mind is arguably one of the most important things to watch out for from this perspective in the budget, if at all?
See, ease of doing business can't be addressed in the budget. It has to be built, based on consensus and taking the states along. I think, but even more important is how to eliminate the real grassroots level harassments. I think that's a key part of ease of doing business, and that's what needs to be addressed in terms of, I don't know, governance structures or reforms, anti-corruption movement. So, in fact, if that improves, I don't even think we need PLI. So PLI essentially directly or indirectly is a cost of or trying to make up for all these inefficiencies at the grassroots level. So I think that would probably require more of a mindset change rather than any thing in the budget or fiscal incentives, I would say.
Yeah, but just to that point, Neeraj, now either you look at subsidies as a red flag or you look at them as a consumption boost, because in the course of this conversation we've ended up looking at it both ways. For now, at least, if that's what's propping up the economy to some extent, wouldn't that at least be a positive from a market's perspective?
See, subsidies are now going to be a global phenomenon in my view.
A global phenomenon?
A global phenomenon, because I think the end game everywhere is the world, especially the developed countries, are so much deep in debt that the only way out structurally is to inflate their way out of the problems, whether it's the US or Europe, anything, right? Which will mean that you will see asset prices, continue to be high. Inflation will be there structurally as a sticky way, and which will mean that the lower income category, population will have to be directly or indirectly subsidized, whether it's UBI or, as we saw in COVID, the US was giving $1,000 checks to people. I think that will have to continue because inflation is going to be sticky, especially in the places where you have seen so much debt building up. Even, for example, President Trump's measures to, introduce import duties will, initially at least, till the time you have US ramping up its own manufacturing, initially it will be inflationary in nature. So that's going to be a structural issue. As we speak, in the last couple of months, again we have seen food grains, etc., prices go up. FMCG companies already talking about raw material price increases.
Yeah.
So I think inflation is not going to go away in a hurry, which means that subsidies will be a structural part of any economy.
No, just on the tariffs bit, and I wanted to get your view, Mr. Saita, because we did a story that we're expecting in this budget a custom duty drop on 7 to 8 items imported from the US. It's, in a sense, perhaps you can look at it as a preemptive move as all of this tariff talk goes on. What does India need to do to be on the right side of this tariff trade war, this global tariff war which is going to erupt?
I would feel that yes, some definitely signals might come along, but primarily anything that we do will be measured. I would feel we would wait for what exactly US comes up with, and I don't think India is on the top of the list of countries which will face the heat of tariffs.
Yeah.
So we would wait, I think, to see how it goes along. But yes, any and every items which are primarily inputs where India is value adding on that and sending out again, particularly, I think that's where we will see definitely tariffs coming down.
I think our fight is not really with the US.
Yeah.
The duties have to be with China, right? Imports from China is the bigger one.
Yeah, but just that, I think, so we've done a small exclusive 3-4 days back. It's a very small, tiny item, but 7 or 8 key items from the US might see some bit of duty changes.
Right.
Maybe it's ahead of the Trump-Modi meet or Modi-Trump meet, as the case
Symbolic.
may be. Symbolic in nature, but yeah, something like that to come out as well. So pretty interesting things that might happen.
Yeah. Ramdev Agarwal joining us on the conversation this morning, Chairman and co-founder of Motilal Oswal Financial Services. Mr. Agarwal, thank you so much for speaking with us here at NDTV Profit. Absolute pleasure on what is turning out to be perhaps an exciting morning, more optimistic than we would have thought at the start of this week.
Hello, yeah. Good morning. So clearly things are kind of evenly balanced, and there's a lot of hope that the FM is going to shower goodies for the middle class and women class. That looks to be what even PM's expectation is. So I would think that the commitment to what you call Viksit Bharat, that's coming out very clearly, and one of the ways to increase the GDP growth rate from say 6.5% to maybe 7.5% would be the giving some kind of incentive to the middle class for consumption. That looks to be the theme right now.
And do you think that that's the single most important perspective? I'm just wondering, on a budget morning, and we're speaking half an hour before the budget, what does a Ramdev Agarwal have on his checklist to look at? Will you be looking at the Capex figure, the fiscal deficit figure? What is that top point that you're looking at?
Yeah, so I've noted down 3 points. One is the middle class, what exactly they end up doing for the middle class, and where FM has said, clearly PM knows what exactly is going to come. So his wishes are around middle class and women class and poor. So clearly we are going to see some bundle of measures out there, whether it stands up to anything in the market or not, that's one thing. Second is the commitment to 8% growth, whatever it takes. I mean, it is for the leadership to say that we are committed to 8% year on year. They will, so how committed they are, bureaucracy as well as the policymakers and leadership, to 8% thing. Third, the credit flow. I think one of the biggest things which has hurt the economy in last 12 months, in my limited understanding is the credit flow into the entire economy, which has come down from 15-16% to 10-12%. If we remain at 10-11%, do whatever, I don't think we'll ever touch 6.5%. That's my sense.
Okay. Mr. Agarwal, good morning. Neeraj here. I love the backdrop. Budget bullets. Maybe dodge any bullets that might come our way if they do. But here's my question, sir. One of the things that some of the panelists have stated today, of course, the unequivocal focus on growth, and therefore, if the FM and the government, or the FM in her wisdom, decides to deviate a little bit from the fiscal glide path, if that shows an intent to invest for growth or creating demand. So if the next year's number is not 4.5, right, and it says that it is being done to stimulate growth, will the markets take it well, or will the markets be disappointed?
I don't know about the market, but I'll be very happy. In the sense that, to me, growth is paramount, and if you can do fiscal, to me, if you can do the growth and then consolidate fiscally, that will be very good. But I would not put fiscal consolidation as a priority over the growth. Because once growth comes, even fiscal consolidation is possible because your tax revenues, they get boosted.
Okay, that's one. And something that I'll ask Meer Vora also, but just a follow-up question to that, Mr. Agarwal. We want to do a lot of things. There is very limited resources as well. This time around, we know that this year the revenue picture also has not looked that strong, right? So let's assume the fiscal path is maintained, if you will. There is not, I mean, we haven't done enough Capex, and let's assume that number stays as is and doesn't really increase too much, if you will, and therefore misses the budgeted estimates too. Will that be a disappointment, or will that be a need of the hour because revenues also have been lower?
I mean, let's see the actual number, what comes out. My sense is that if they're able to boost the GDP growth and nominal GDP growth rate, even if with a little higher inflation of about, say, 5%, I think they will have enough revenue. And so they will have enough resources if they want to do, if they want to maintain and actually increase nominally the capital expenditure. Because the best place where the capital expenditure will give rewards to the economy is going to be infrastructure, and that only government can do. So clearly the momentum which we are seeing in last few years, where government is coming very aggressively onto the infrastructure side, that momentum should be maintained. And if anything, whatever was the budgetary provision last year, the next year should be somewhat higher, at least 10-12% nominally, so that it may remain percentage of GDP same, but nominal value will be 8-10% higher.
The other piece, Mr. Agarwal, that from a market's perspective, what does it look to? The last few years have seen this unequivocal focus towards creating manufacturing assets, giving PLI schemes, etc. That may well continue. But if there are tax changes or other changes done in order to boost consumption, all right, and boost household income, does it change the texture of the market in that the market starts rewarding consumption themes, staples, what have you? And is that fair too?
See, Neeraj, actually market is looking for earnings growth. I mean, from whichever sector it comes. It is not necessary from the only consumption side the earnings growth should come. If aggregate earnings growth, which is now flattened from last year 1,000 rupees EPS for Nifty, it has come to about 1,050 for the current year. Next year, if it doesn't scale up to 10-12% from 1,050 to say more like 1,200 or 1,150, I think market will not be excited. So it doesn't matter from which sector it comes, whether it comes from infra side, consumption side, energy side, you take your pick from which side it comes. But my aggregate earnings growth should be more like, I'm speaking as a capital market guy. If my earnings growth next year looks to be, my head of research revises the earnings growth projection for 25-26 to by 12 to 15%, that will be the big day, whether it comes by tax cut, whether it comes by earnings growth, I mean per se top line growth, or margin expansion, that is all. But 12 to 15% earnings growth next year is almost a must to hold the markets at 23,000.
Okay. I'm just on earnings growth, Mr. Agarwal. Want to get your view. Have you, if there's a scale of disappointment or optimism, how are you feeling from what you've seen so far? Because Q3 and second half was supposed to be the better picture being painted. This is what we all heard in the end of Q2. What have been your thoughts when you've seen the earnings growth? Because at the end of the day, budget will go one day affair. After that, you will have Trump doing whatever Trump does. But this is the core number that we need to watch.
Yeah. So clearly last year, if you see the economic survey, Mr. Anand has gone about saying that the slowdown is not structural, it's seasonal, in the sense that because of elections, the government Capex slowed down, at least in the first 9 months. And that has led to whatever Q3 5.4% or somewhat like that. It's not a structural slowdown in the economy, it is more of a seasonal. And that's why he is, in one of the interviews I heard yesterday, he said, of course in the economic survey is written that their expectation is about 6.3 to 6.8, but he's the guy who is insightful today, because he has written the whole thing. So my sense is his expectation of about 7% for 25-26. I would think that he would be on the right line of thinking. And if that 7% comes with 4.5-5% inflation, I think we'll have good time. In the sense that corporate earnings will pick up by more than 12 to 15%.
Got it. Mr. Agarwal, I have one final question, and that is not necessarily budget linked, but you could argue it's budget linked. And I'm saying that let's assume the budget dishes out most things that you say, if not all. I would love to know at the start of 2025 how bullish, bearish, neutral is Ramdev Agrawal from a 12-month perspective. I know you're very bullish over the long term. Just trying to think for the slightly shorter term, which is 12 months.
Yeah. So 12 months looks to be, I would not be very bullish, let me tell you. I would be a little more on cautionary basis, in the sense that I would expect about first half I would not be that bullish, but second half I'll be very, very bullish. So on the whole, for the year, with little pain in the beginning, I think we should do well. And so I would be cautiously optimistic for 25-26, particularly back-ended.
I want to get your view, Mr. Agarwal, on what we've been seeing in terms of tariffs. And while, if I would look at it from three factors: one, what the government does; one, what corporate India does in terms of its earnings and its performance; and then one is geopolitical. And geopolitical factors are going to be dominated by tariffs. All the announcements this morning, how did you look at it? And is this an opportunity for India or a threat?
I think it will be both ways, in the sense that I think it will be more of an opportunity, because the big daddy in the global manufacturing is China. And if China is being restricted, clearly the tenor of Trump's tariff policy looks to be make Chinese imports a little uneconomical, so that the local manufacturing becomes a little more viable. To that extent, if there's not so much of tariff on Indian imports, probably it will be a huge tailwind, longer term tailwind for Indian manufacturers to step up their effort and export a lot more to the US. But that looks to be pretty, simple analysis of what is going to come. It's a very complex thing. We have to play as it comes. So let's not speculate anything till final things have come.
Okay, fair enough. We don't know yet. If tariffs for China, good for India, we don't know what's going to happen from the Indian perspective. But in the context of this budget, Mr. Agarwal, what do you think we need to see? Would you wait to hear some clear policy direction there?
Yeah, so clearly, as I said, their ultimate North Star is the Viksit Bharat by 2047. And it is very well clearly laid out that compounded growth of about 8% is required. We are at about less than 6% right now, as it turns. So you have to have very, very clear policy guidelines. And where there is will, there is a way. And once Mr. Modi has set his eyes on Viksit Bharat and 8% growth, all the forces and the policy making will come together, whether it is a deregulation of the businessman or ease of doing business, regulators coming, little soft pedaling on the operators. So I mean, say like credit flow into the economy. Once you slow down the credit flow into the economy, a lot of other measures don't work. So I think first they have to do the plumbing of increasing the credit flow into the economy. And that I think at least economic surveys talked about it. Let's see whether it comes or not. Or maybe it may not be in the budget, but at least follow on to the budget. There could be rate cut, there could be, I would expect a lot more monetary action than the fiscal action as we go forward in next 1 month.
Just, I know we've been saying one last for a while, but this is really the last one. I'm just wondering, how are you looking at the pain point in the markets right now? And do you see Feb 1st and then Feb 7th after the monetary policy opportunity for a pivot here? Just wanting to get what's in your head right now when you think about where Indian equity is going.
Yeah. See, broader market last year, actual portfolios did very well, like anywhere between 35 to 40, 50% return on the back of the broad index doing just about 8-10%. So clearly we have beaten the index last year. This year, I think index will come and beat us all. So most likely, it will be very tough for most of the active managers to beat the broad index. And hence, there could be a churn from mid and small to large cap. But that happens only when foreigners, they start buying big time, because they love to buy large cap, and large cap valuations have become very reasonable. So let's see when the tide turns, and it turns when you don't expect it. So quite possible times are coming when things may change and surprise us the pace at which it changes. So I would think that there are a lot happening in the Indian economy. Large caps are reasonably priced. Mid and small are still slightly elevated, and that IPO market is kind of bringing it down one by one, because the offerings are there relentlessly. So it's one of the hottest IPO market. I think one of the things which I didn't say, and I think it didn't come even in the economic survey, is the flow of the risk capital, unprecedented flow of risk capital in the economy. If it is harnessed well, it can change the complete trajectory of economic growth and the pace at which we can develop. So that is what is going to happen in next 1 or 2 years, and I would like to see how the FM helps that flow and uses that risk capital flow into the economy very, very creatively.
Well, let's hope a lot of these wishes turn out to be true. Mr. Agarwal, thank you so much for joining in today and giving us your thoughts. Really appreciate your time.
Thanks.
All right, that's an important market view from Ramdev Agrawal of Motilal Oswal. And just before we ask the follow-ups to some of these points, and in fact, I think the points collaborated between what Mr. Sehta said, what Mihir Vora said, and what Mr. Agarwal had to say. But before we do that, just a quick perspective from our research team as well, which has been waiting to talk about what should you watch out for ahead of the budget. Remember, it's not a bad market in that we are at about 1/3% in the green ahead of the budget, and small caps continue to trudge higher. In fact, it's not a trudge really. With the 1.7% gain yesterday and the 1% uptick today, small caps are really doing well. What are the stocks to watch ahead of the budget? Somit is here with a list of some of those. Somit, tell us the names and why you have chosen those.
Well, firstly, top on the list is ITC, because in the last 3 budgets we have not seen any major tax hike related to cigarette come in, and so Street is expecting that there would be definitely a tax hike on cigarettes this time. So if it's a double-digit tax hike, then definitely it's negative for ITC, but a mid to high single-digit tax hike would be neutral, and a low single-digit tax hike would definitely be positive for ITC. Apart from that is the capital goods and road infra companies like L&T, IRB Infra, Dilip Bilcon, that would be in focus. Now the Street is saying that if the capital expenditure growth is less than 15%, then it could be negative for the capital goods and the road infra infra companies. Then there are rural focused companies like Imami, Dabur, Jyoti Labs, Chambal Fertilizers, GSFC, M&M Finance and L&T Finance. So any increased allocation towards rural spending, agriculture spending, rural schemes would definitely be positive for these rural focused companies. Then there are housing finance companies like PNB Housing, LIC Housing, Awas Housing. All these stocks would remain in focus because any increased allocation towards CLSS scheme, that is the housing scheme, or PMAY scheme would definitely be positive for this housing finance companies. Then there are oil marketing companies like IOCL, BPCL and HPCL, and these stocks would definitely remain in focus given the fact that they have incurred huge LPG subsidy losses in FY25. So any lower allocation towards subsidy, LPG subsidy would definitely be negative for the oil marketing companies. And lastly, it's Adani Green, Tata Power and Wari Renewables. All these stocks would remain in focus because government has clearly showed their focus or intent towards increasing solar energy. So any increased allocation towards rooftop solar would definitely be positive for Adani Power, Wari Renewables and Tata Power.
For that, Samit, so those are some of the stocks that you should look at, and some of them have already run up actually in anticipation. There's just about 13 minutes left for the speech to start. We're taking a very short break and coming right back. How do you set up for trade in this last bit before the speech? Stay tuned for that and more. This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets. General elections.
Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT definitely needs to change because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40.
Welcome back. Thanks so much for tuning in, staying tuned to NDTV Profit. Now, this is something that has come up in conversation in the last 1 hour, 15 minutes. And that is it okay to miss the Fisc glide path targets if the intent is to spur growth? And Mihir Vora, you look at these numbers very, very closely, right? The Fisc deficit, the income that the government has, the fixed expenditures, etc. One, does the government have enough headroom for FY26, not just FY25 by the way, to keep that momentum on Capex example and at the same time boost consumption? And if it does not, is it okay to miss the fiscal deficit glide path target for FY26 if they are doing it in the right spaces, which makes the market believe that they are wanting to spur growth? And what would you have, even if they have the budget or even if they have the numbers? Is it prudent to do that, or would you not want it?
See, I don't think the RBI and the government are in a mindset to deviate too much from the glide path that has been shown to the market, because I think we as a country are very conscious about the fact that we tried so hard to get into the global bond indices, and that does come with some kind of soft commitments and understandings about where the fiscal direction should go. So the mindset is not really to deviate. That's one. Having said that, if you look at the tax collections and if you introduce a little more discipline in the taxation regime, there is a scope for tax to GDP to go up. In spite of having introduced GST, etc., the tax to GDP ratio is creeping up very slowly. So there is a scope for better, compliance, better this thing, not terrorism but compliance, right? There is scope there. So I'd rather that they focus on increasing the tax to GDP rather than increasing taxes. And if we can get a nominal GDP growth of closer to 12% rather than 10.5%, then there will be scope for extra spending, I would say.
Okay, Mr. Sethap, just the same question to you really.
Yeah. So I don't think they will want to miss the fiscal deficit number for next year as well.
Yeah.
Maybe year thereafter, because of the 8-pay commission, there might be some aberration. But at least for next year, I think they'll still stay with the fiscal deficit number. At the same time, I do feel that they will want to bring growth much higher than what we are currently seeing. And while it's a wish, I'm not sure whether it will happen. If it means that government Capex, in order to be maintained, needs some revenue, I think the best course and the correct course for them to take would be more aggressive on the disinvestments. I think, while I'm not sure they will do it.
Believe it, sir.
Sorry?
While the market even believe that if they're aggressive, because they are not meeting the targets even for this year, right? Or the last year, or the year before that, what have you?
Yes. So the point that I'm trying to make is what they ought to do.
Okay.
And probably if they do this, they should not give up on infrastructure building, government Capex, because that's what will crowd in even private investment.
Sure.
But giving up on growth would be a bad idea, because taxes will really come from growth as well. The buoyancy in taxes will come to a large extent also from growth. So I don't think they should sacrifice growth. They will not want to sacrifice fiscal deficit. So I am trying to say that if you sacrifice growth, in any case taxes will come down and fiscal deficit will be a problem. So you must maintain growth, and if that requires disinvestment, but Capex, government Capex has to be there. So that's the way I would feel they should balance their books. But government Capex should not be sacrificed. Fiscal deficit they won't, and I think they should not. We've tasted the fruits of a good macro stable environment, and I don't think they'll want to give that up very easily.
Just some of the focus areas that we need to look at, and Mihir, we have 5 minutes to go for the speech, so let's get a little specific on the markets just for a bit. And we were speaking in the break about how a lot of people just don't want to trade on the budget day, but there are a lot of people who do, and many of them watching us right now. Thank you for all your views, even on our YouTube stream. Just trying to understand whether the typical rail, solar energy, defense push is something that is a safe play this morning.
100%, because these are structural plays and the direction is very clear, whether it's indigenization of defense manufacturing, whether it's the shift from coal and non-renewables to renewables. So those are structural changes and those are not going to go away. So irrespective of the budget, these are certain themes which are going to be there for the longer term, I would say.
Okay, and if the budget gives focus, that's an added impetus.
That's an added impetus. Absolutely.
Okay. So, well, watch out for that bucket, if you will, of pockets wherein there has been the continued focus and that continues too as well. Mr. Setha, you're not a markets person, but very, very quickly, if there is some tax changes, etc., in order to spur consumption, you think that would be a welcome move? And does that spur the sentiment around consumption?
Absolutely, I think so.
Okay.
Okay, so interesting piece on, and this budget important because the last budget was in July, and you walked in and said budget phir se aa gaya itna jaldi. That sets up perfectly for this piece that our colleague Hiral has done, where she's tracked markets since the last budget in July and today. Important because what a change in mood since these two events. Take a look.
If we can just move to the key 9 aspects which the markets had considered, which the budget 2024 had considered, that will be key. Firstly, disappointed investors, as Neeraj also mentioned, however, rewarded some taxpayers, right? So that was one of the key focus areas. But there were 9 things that Nirmala Sitharaman actually looked at. One was productivity and resilience with regards to agriculture. So schemes with agriculture that were announced. Employment and skilling was their next focus area. Moving on, the others were in terms of inclusive HR development and social justice, manufacturing and services where PLI schemes were announced to some extent. Urban development was the other aspect, and energy security with renewables was one of the focus areas. Infrastructure, which is the crux, Capex has been slowing down. What do they do from here on? Innovation R&D was again what they focused on as well. And very lastly, if you see in terms of next generation reforms. Now, whether all of this has actually helped markets or not, absolutely not. Nifty, a downtick of 5% since the previous budget, where you had broader markets which actually went ahead and underperformed as well to the tune of almost around 7 to 9.5%. So that's the mid cap and the small cap underperformance. Now, very interesting. The performance tells you that the markets were not happy because all your domestic oriented sectors were the ones which have underperformed. From energy to oil and gas, real estate, PSU banks and FMCG, down to the tune of almost around 11 to 21% from the previous budget to now. What has outperformed? It's your export-oriented sectors, Nifty IT, Nifty Pharma, up to the tune of almost around 3 to 6%. So you clearly know that it's the domestic policies which have not really been working for India Inc. It's the export-oriented ones. And similar is the trend if you see in terms of gainers and losers. From a TV slab to Wipro, Bajaj Finance, Holdings and a Bharti Airtel, gains to the tune of almost 12 to 26% that did come in. What was losing? Adani Green did lose out. Yes, there was a Hindenburg impact coming in there. But you had a BHEL, IndusInd Bank, Tata Motors, JSW Energy, all in the range of around 30 to 36%, which were under pressure. Let's look at the broader markets. If you see Nifty 500, you have 366 stocks that have actually given negative returns since the previous budget out of Nifty 500. So that tells you the quantum of underperformance that has come in there. And if you talk about the mid-cap companies, BSE actually is outperformed with gains of nearly 2.3 times. But Lloyds Metal, Paytm, Coforge, Dixon, these are the ones which were losing to the tune of around 30 to 75%, gaining, I beg your pardon, to the tune of 30 to 75%. Whereas names like Cochin Shipyard, Vodafone Idea, MRPL, SJV and Exide Industries, all down in the range of around 35 to 45%. Small caps, you have Amber Enterprises, Piramal, KFin Tech, Aster DM, MCX, all up in the range of 40 to 50%. Whereas if you see in terms of the losers, if you can have that slide, there you go. Honasa, Sterling, Chennai Petro, Tanla, Jupiter, these were the names which were losing out. So that's in terms of the performance, but let's also look at a few of the other reasons which impacted the markets. You had the largest ever FI sell-off that came in to the tune of almost around 2.7 lakh crore. Secondly, you have analysts who have gone ahead and cut estimates as well with regards to earnings for FY25 and 26. Apart from that, if you talk about the geopolitical concerns, they have been looming on the domestic markets. And very lastly, if you see in terms of the election year, that has seen lower government spends.
Okay, first visuals coming in from Parliament. And the customary noise around it as well. Remember, it's also the start of the budget session. Honorable Speaker in the chair, let's listen in.
बजट के बाद राज्यपाल अभिभाषण में आपको पर्याप्त अवसर दूंगा। मेरा आपसे निवेदन है, नहीं माननीय अखिलेश जी, आपने संसद की मर्यादा को आप बना के रखें। कभी बजट भाषण के अंदर इस तरीके का नहीं हुआ, ये उचित नहीं है।